Cardano just pulled off something wild. The foundation voted yes on a 5 million ADA Treasury withdrawal, that's over $2 million, to fund global exchange listings. And while everyone's distracted by the governance drama, ADA's price is quietly setting up for a monster move to 50 cents. Whales are loading up, funding rates just flipped bullish, and the technicals, they're screaming recovery. But there's a catch. 2 identical proposals got rejected, so what's really happening behind the scenes? Welcome back to the channel. If you're new here, I break down crypto news with actual analysis, not hopium. Hit that like button right now, it helps more than you think. And subscribe so you don't miss the next breakout we call early. Let's get into it. ADA's trading at 42 cents as we speak. It climbed nearly 5% yesterday after bouncing off critical support. Now, that might not sound earth-shattering, but context matters. For weeks, Cardano's been trapped in a falling wedge, a pattern that historically precedes explosive rallies. The price tested the lower boundary last Saturday, held firm, and recovered 6% in 2 days. But the real story isn't just price action, it's what's happening beneath the surface. According to CryptoQuant's on-chain data, large whale orders are surging. These aren't retail traders panic-buying dips. These are institutional-sized wallets accumulating while everyone else is distracted. Buy-side dominance is climbing, conditions are cooling, and the smart money is positioning for what comes next. Now, here's where it gets interesting. The Cardano Foundation, arguably one of the most conservative governance bodies in crypto, just voted yes on a controversial Treasury proposal. 5 million ADA, roughly $2 million, handed to the Snek team to expand exchange listings for ADA and Cardano native tokens. That's not charity. That's a calculated bet on global adoption, so why now? Why approve this loan when Cardano's been notoriously cautious about treasury spending? The foundation had concerns earlier, legitimate ones about accountability and transparency. But according to their rationale shared on X, those issues have been substantially resolved. They're praising Snek for introducing what they call an innovative funding mechanism that fills a critical gap for mature projects needing growth capital. But wait, if Snek's so trustworthy, why did the foundation abstain on 2 other identical proposals? That's the part nobody's talking about. The foundation explicitly stated those submissions were substantively identical to the approved one, calling them redundant. Snek submitted multiple versions, possibly to hedge their bets or test governance waters. The foundation shut that down, voting to abstain, while maintaining they strongly support Snek's mission. In my opinion, this is governance theater at its finest. The foundation wants to appear prudent without blocking progress entirely. They approved 1 loan, rejected duplicates, and attached conditions that keep Snek on a tight leash. It's smart politicking, but it also reveals something crucial. Cardano's governance is maturing. They're not rubber stamping everything. They're demanding accountability while funding real utility. Meanwhile, traders are watching derivatives markets closely. CoinGlass data shows the OI-weighted funding rate just flipped positive at 0.0014%. That means long positions are paying shorts, a classic signal that sentiments shifted bullish. When funding rates flip from negative to positive, ADA historically rallies hard. Check the charts yourself. Every major recovery in the past 12 months started with this exact setup. ADA's sitting at the lower boundary of a falling wedge pattern, one of the most reliable bullish reversal signals in technical analysis. The relative strength index recently dipped below 30, flashing oversold conditions. It's now pointing upward, suggesting bearish momentum is running out of steam. The MACD lines are converging, nearing a bullish crossover. For non-technical folks, that's like watching a spring compress before it explodes. If ADA breaks current resistance, the next target is 49 cents. Close above that, and we're staring at the psychological 50-cent level. That's a 17% move from here. Not moonshot territory, but solid gains in a market where most alts are bleeding out. A well-known crypto analyst pointed out that wedge breakouts typically push 20 to 30% higher. If that plays out, we're looking at ADA testing 60 cents before year-end. Now, I'm not saying it's guaranteed. Markets don't care about patterns, they care about liquidity and sentiment. But when on-chain data aligns with technical setups and governance catalysts, the odds tilt heavily bullish. Whales don't accumulate at support for fun. They're front-running something, and my bet is they're positioning for exchange listing announcements. Snek's plan is ambitious. They're targeting Tier 1 exchanges for Cardano native tokens, which have historically struggled to gain mainstream traction. If they secure listings on platforms like Binance or Coinbase for tokens like Snek, the spillover demand for ADA, the base layer, could be massive. That's just basic tokenomics. More utility equals more network demand equals higher prices. The Foundation's rationale document mentions Intersec's role as administrator, adding oversight to prevent misuse of funds. In my view, this is exactly what crypto governance should look like. It's not about trusting blindly, it's about building systems where accountability is baked in. The advisory board's scope isn't finalized yet, which means Snek will face ongoing scrutiny. That's healthy pressure that keeps projects honest. But let's address the downside because I'm not here to sell you hopium. If ADA fails to hold 42 cents, the next support sits at 39 cents, the lower trendline boundary. A break below that invalidates the wedge pattern and opens the door to further bleeding. That's a 7% drop from current levels, which in crypto terms is, well, just a Tuesday afternoon. The broader market matters too. Bitcoin's consolidating after its recent surge. If BTC dumps, altcoins follow, no exceptions. ADA's correlation with Bitcoin remains strong, so even with bullish fundamentals, a macro pullback could totally derail this setup. Risk management isn't optional. Set your stops, size positions appropriately, and, yeah, don't bet the farm on any single trade. That said, the risk-reward here looks pretty favorable. Downside is capped near 39 cents. Upside extends to 50 cents, possibly 60. That's a 2-to-1 ratio minimum, which is tradable all day. So, add in the governance catalyst, whale accumulation, and technical alignment, and, well, you've got a textbook setup. Oh, and one more thing about the Treasury vote. Cardano's internal governance team actually disclosed their voting breakdown. 4 members deemed the proposal constitutional, 0 voted against, 0 abstained, and 1 didn't vote. That's pretty much near unanimous support from a group that's honestly been historically conservative. When institutions move this decisively, it really signals confidence that retail just hasn't priced in yet. The foundation also dropped some hints about reviewing Snek's updated proposals once revisions are complete. That tells me, more funding could flow if this initial loan delivers results. If Snek secures even one major exchange listing in the first quarter of 2026, expect additional Treasury support. That creates a positive feedback loop. Funding leads to listings, listings drive demand, and demand justifies more funding. It's how ecosystems scale. Look, Cardano's been the underdog narrative for years. It moves slow, prioritizes research over hype, and yeah, it gets clowned on Twitter for never delivering. But quietly, the fundamentals are stacking up. Treasury governance is working, whales are accumulating, technical patterns are aligning, and now, real capital is flowing toward exchange expansion. Whether ADA hits 50 cents this month or next doesn't matter as much as the trend direction. The setup is there. The catalysts are real. Now it's about execution. If you found this analysis useful, check out my recent video on Bitcoin's next resistance levels. It ties into the broader altcoin thesis. And don't forget to drop a like and subscribe. Your support keeps this channel running. Quick reminder, nothing I say is financial advice. Crypto is volatile, unpredictable, and can wreck your portfolio overnight. Do your own research, only risk what you can afford to lose, and never trust random YouTubers, including me, with your money. Trade smart, stay safe, and I'll see you in the next one.